Howdy there, folks. Very simple video I want to take you through and kind of give you my opinion on what the Fed just said here in their statement minutes ago. And I want to give you my opinion on what this means for the markets, for if they're going to continue to raise rates, kind of reading between the lines and things like this. The Fed many times can kind of hint to certain things they're going to do down the road in these statements, okay? So first off, starting out here, recent indicators of spending in production have softened. You know, that right off the bat, that sets things up into a situation where they could definitely, if inflation starts to come down in terms of the rate of growth, they can definitely go softer on future raises. Right off the bat, if you're talking about spending, production have softened, you're setting yourself up to potentially maybe only raise 50 basis points or 25 basis points next time when you start out a statement like that, okay? Nonetheless, job gains have been robust in recent months and the unemployment rate has remained low. Inflation remains elevated, reflecting supply and demand imbalances related to the pandemic. So that's an important statement here, okay? They're still basically saying that inflation remains elevated, but it's because it's reflecting supply and demand imbalances, okay? That's very important. Higher food and energy prices and a broader price pressures. Russia's war against Ukraine is causing tremendous human and economic hardship. The war and related events are creating additional upward pressure on inflation and weighing on global economic activity. Definitely in Europe, even more so. The committee is highly attentive to inflation risks. Okay, that's good. Definitely good. The committee seeks to achieve maximum employment and inflation at a rate of 2% over the longer run. And obviously, we're not even close to 2% right now. The latest numbers, we were at like 9%, a little over 9% for inflation, just for anybody that's not caught up. So yeah, we're a long way from 2%. 2%, I mean, it's probably going to take us to 2023 to get down to 2%. We could see the rate of increase continue to drop throughout this year, but to go from 9 to 2, it's going to take a bit of time to get down there, okay? In support of these goals, the committee decided to raise the target range for the federal funds rate to 2 1/4 to 2.5%. So basically, they're raising 75 basis points, okay, 0.75%, and anticipates that ongoing increases in the target range will be appropriate. In addition, the committee will continue reducing its holdings of Treasury securities and agency debt and agency mortgage-backed securities, okay, as described in the plans for reducing the size of the Federal Reserve's balance sheet that were issued in May. The committee is strongly committed to returning inflation to its 2% objective. Keep in mind, it's going to take some time to get it down to 2%. But the thing is, you might think, okay, they're trying to get it down to 2%. They're just going to keep raising like crazy. Not really. Not when you're talking about right off the bat in your first sentence, indicators are spending in production have softened. What if they soften even more over the next 3 months, right? And when you also are saying, you know, inflation remains elevated, but you're saying it's reflecting supply and demand imbalances, you know, you're basically in the belief that, you know, once supply and demand get in balance, right, and you're in a situation where you don't have to continue to raise rates. In assessing the appropriate stance of monetary policy, the committee will continue to monitor the implications of incoming information for the economic outlook. The committee would be prepared to adjust the stance of monetary policy as appropriate if risks emerge that could impede the attainment of the committee's goals. Okay, so that's basically just putting everything on the table. Raising rates, lowering rates, all those things. We'll just put it all on the table. The committee's assessments will take into account a wide range of information, including readings on public health, labor market conditions, inflation pressures, and inflation expectations. And why do you keep using and? I don't understand this. And financial and international developments. I mean, I swear I learned in school a long time ago, you can't just keep putting and in a sentence again and again and again. And international developments. So this basically is the Fed trying to cover their bases as far as just leaving the door open of like potentially continue to raise rates, which is what people expect, or potentially lowering rates as well there, okay? So as far as stocks go, obviously, you know, big tech's beasting today. A lot of stocks are beasting. I'll do a whole dedicated video later today all on the markets, what's going on in the markets, earnings. We got a bunch of earnings coming after the bell. We had a bunch of earnings this morning. I'll do an in-depth video probably in 4 or 5 hours on all that in depth. I just want to cover this for you guys as far as what's going on on with the Fed there. Yeah, you know, they're setting themselves up, in my opinion. This is my personal opinion. They're setting themselves up to potentially only raise 50 basis points or 25 basis points next time they raise rates in a few months. And if I had to guess, I think the rate of increase of inflation will start coming down over the next, let's call it 2 or 3 months, to maybe 8, 7%, maybe even 6%, talking 3 months from now. And that will be a situation where the Fed will be able to say, okay, you know, we can back off of these 75 basis point increases and we can go a little tamer. Now, if the economy deteriorates over that time, that gives the Fed even more ammo to make a move like that, right? If the economy is still super strong and the stock market comes back strong and inflation remains 8% plus, then the Fed's going to still do another 75 basis points next time they raise, okay? So do keep that in mind. All right, guys, much love as always. Check back with me later, and peace.